Welcome to today's episode. We're diving into a fascinating development that's shaking up the European economy. The Eurozone has recently reported its lowest inflation in years, hitting 1.7% in September and remaining steady at 2% in October. This marks a historic low and signals a significant shift from the skyrocketing prices we've witnessed over the past few years. But what does this really mean, and how is it affecting both Europe and the world? To start, let's break down why this is such a big deal. Inflation has been a major concern globally, especially after the pandemic and the energy price surges that followed the geopolitical tensions, notably the war in Ukraine. At one point, inflation in the Eurozone was well over 10%. But now, we're seeing a completely different trend. A big factor in this shift is the drop in energy prices. Natural gas and crude oil prices have stabilized after the sharp rises during the energy crisis. This, in turn, has helped lower overall inflation. The cooling down of energy prices has been a huge relief for businesses and consumers alike, as it directly impacts the cost of living and doing business. But it's not just energy that's contributing to this decline. The food sector, which had been hit particularly hard by inflation, is also seeing price stabilization. This is due to improvements in agriculture and better management of global supply chains. For instance, the agriculture sector has benefited from better crop yields, and supply chains, which were once severely disrupted, are now functioning more smoothly. In addition, the services sector, which had seen significant price hikes, is now experiencing a slowdown in price increases. This includes transportation and hospitality services, which are critical components of the Eurozone economy. The big question, though, is what happens next. Lower inflation is, of course, good news for consumers. It means their money goes further, and businesses benefit from a more predictable cost structure. This can also encourage consumer spending and investments. But there's a potential downside to all of this: deflation. If inflation drops too much, it could hurt the economy in a different way. In a deflationary period, falling prices might cause people to delay spending, anticipating that things will be cheaper in the future. This could result in a vicious cycle of lower wages, less investment, and stagnant economic growth. Globally, the effects of this inflation dip are being felt. European exports, which had been struggling with rising costs, are becoming more competitive now that inflation is under control. This is particularly good news for export-heavy economies like Germany, which relies heavily on its manufacturing sector. A stable inflation environment in the Eurozone could also influence the monetary policies of other central banks, like the U.S. Federal Reserve and the Bank of Japan, as they assess their own economic strategies in light of global trends. Looking ahead, the forecast for the Eurozone is cautiously optimistic. Economists are predicting modest growth of around 1.2% for 2025, an improvement over the stagnation seen in 2024. However, there are still risks. Geopolitical tensions, energy price volatility, or even global economic slowdowns could threaten this recovery. It's a critical time for the European Central Bank, which will need to balance further rate cuts to stimulate growth without triggering deflation. So, while this drop in inflation is a relief, it also brings its own set of challenges. Europe is at a crucial juncture. Can it maintain this stability and find a path to sustainable growth, or will external factors disrupt the progress made so far? Thanks for tuning in to today's episode. If you found this analysis helpful or have thoughts on how this inflation shift will affect you, let us know in the comments. Be sure to subscribe so you don't miss our future episodes as we continue to follow economic developments. Until next time, take care and stay informed.